Welcome back to Explain the Charts. Today, March 12th, 2025, we're diving into USDCAD, examining both the latest news and the charts to find potential trading opportunities. First, let's recap the news. Trade war tensions are back in focus with potential U.S. tariffs impacting the Canadian dollar. The Bank of Canada is considering a rate cut, and U.S. inflation data is looming. All of these factors are contributing to volatility in USDCAD. Let's start with the one-day chart. We can see quite a bit of chop over the past several months, especially some large swings from January to March 2025. Notice the candles where the price rapidly fell from peaks around 1.44, and consider news headlines which occurred around those times. Specifically, look around January 10th, 2025 and November 15th, 2024. These candles have long wicks showing a rapid change in price, possibly correlated to inflation concerns in the U.S. and Bank of Canada announcements about interest rates. The overall trend has been ranging between roughly 1.30 and 1.45 since late 2023. But there have also been several false flag scenarios where the price has gone far outside of the range only to be immediately rejected by the market. Now let's zoom in on a recent time period on the daily chart to get a better view of what's going on. Looking at the last month or so, from mid-February to today, March 12th, we see some recent upward momentum. The most recent candle today, however, is looking bearish and red. We can see a few recent red candles indicating more downside, including a large drop on March 6th and 7th. Now, let's switch over to the 1-hour chart for a closer look at that recent price action. Looking at the last few days on the 1-hour chart, it's a bit more noisy, but we can see the price has been climbing since yesterday, March 11th. However, we can see the price has hit a wall in the last few hours and is moving downwards, so be aware of this short-term trend. If the price breaks below 1.44, we could see a further dip. Taking a look at the 15-minute chart, we see that the most recent few candles are bouncing around 1.443. If the price fails to hold here and goes lower, it may try to test a support level around 1.435. However, volume is relatively light right now, so a small number of large sell orders could cause the price to go lower than that. Conversely, on the 15-minute chart, we can see that it may try to test recent peaks around 1.448 and 1.451. Therefore, a short-term long position would have a good chance of success if the price bounces off of 1.443 and aims for those prior peaks. In summary, USDCAD is facing headwinds from potential trade wars and the possibility of a BC rate cut. The daily chart shows a wide trading range between 1.30 and 1.45, with recent upward momentum, while the hourly chart indicates that a short-term downward trend is forming, while the 15-minute chart has a short-term potential for long positions. For the short term, watch the 1.443 price level for a bounce. If it breaks down, the price may dip to 1.435. If there is upward momentum, watch prior peaks around 1.448 and 1.451. For the longer term, a break above 1.45 could signal a sustained bullish trend, while a break below 1.30 could signal a sustained bearish trend. The most likely scenarios are that the price bounces around in this range for a while, until there's more news regarding monetary policy or trade wars.